Hey guys, Dave Keller here with Market Misbehavior. I posted a video earlier this week on this channel talking about the FANMAG stocks, or what I call the six FANG stocks: Facebook, Amazon, Netflix, Microsoft, Apple, and Google, or Alphabet. And looking at those six charts and showing how they're not homogeneous, right? There are times when the FANG stocks all trade together. This is one of those times that they actually do not. We're going to follow up with today's video where we focus on the relative strength characteristics, talk about why relative strength is so important, what it can tell us about those six names right now. So Walter Deemer, who ran the technical research department at Putnam Investments in Boston in the 1970s, quoted me in his book, and I'd given a presentation. I said, I never look at a chart without relative strength on it. And that's pretty accurate. When I'm looking at a broad chart, breadth chart or sentiment or something, I don't have any relative data on there for the most part, but I look at a lot of ratios, and anytime I look at a stock, almost entirely, almost all the time, I'm looking at relative strength because it tells you a lot about how this stock is performing relative to other names. So what we're going to do today is follow up on previous video and focus on the six FANMAG stocks and how they have actually very different relative strength characteristics, what I can tell you about their prospects going forward. Before we get to the chart, as a reminder, if you like this sort of thinking about technical analysis, investor psychology, sentiment, trend, momentum, breadth, sentiment, all of the above, if that's of interest to you, subscribe to my channel if you would. I'd love to have you along this ride. Also, give the video a like if you appreciate it. We would very much appreciate that back. Finally, put a comment below the video. Which of the six FANMAG stocks do you see as best equipped to outperform between now and year-end 2021, and why? Let's get to the chart. So if you go back to the previous video, and if you haven't watched that one yet, I'd encourage you to watch that one first. I'll put a link in the description below, which is basically looking at the six FANMAG stocks. I think this is an important group to watch because a lot of times they actually move in a very similar fashion. This is sort of the mega cap communications, technology, consumer trade. And, if you think about mega cap growth, large cap growth, this is kind of the group of names that should represent that approach. However, this is one of those times where there actually quite a bit of dispersion or differentiation between those six stocks. They're not all the same. Earlier in the week, we looked at the price characteristics and we looked at how some of them were breaking out, like Alphabet and Microsoft. Other ones were breaking down, like Facebook and others. Now we're actually going to look particularly at the relative strength profiles because it's a great way of showing the relative movements of them. So here, looking at the chart, we have the New York Stock Exchange FANG Plus Index. And this is an index that the NYSE puts out. It includes these stocks as well as other names like Twitter and stocks like that. So it's not just these names, but it's sort of FANG and FANG-like stocks, and that's why it's called the FANG Plus. Now, if you look, an interesting characteristic, if you look at the relative strength of the FANG index over the last 12 months, which is the time frame we're looking at, it's literally flat. It's been choppier. There have been periods where the FANG stocks outperformed, particularly November through February. Then they underperformed February into May. This is when all the financials and energy stocks were rotating higher. A lot of the banks make new highs April into May. The bank stocks, the energy stocks all sort of rotated lower as some of the growthy stuff started to outperform. But from there on, from June on, it's been sort of a market performer, right? The FANG index has been the market. And that's what this sideways relative strengths over the last 12 months tells you. This is a ratio of the FANG Plus index versus the S&P 500, which means if the line's going up, the FANG stocks are outperforming, or this index. If the line's going down, this index is underperforming. If it's going sideways, it's in line with the market. So it's not going down, it's not going up on a relative basis, it's going flat. On an absolute basis, the prices could be moving, but you're not really gaining or losing anything relative to the benchmark. So the fact that the relative strength is flat, essentially for the last 12 months, tell you really haven't gotten much. Now let's start to look at the six FANMAG stocks. And in the last video, we separated them into three buckets: three stocks that were positioned very well on an absolute basis, two stocks that were sort of sideways that are actually rotating lower, driven by earnings so far today, and then one, Facebook, which is really breaking down on an absolute basis. Now we're just going to purely look at the relative. So each one of these lines shows you the individual stock versus the S&P 500. I'm using the spiders here because that does it on a total return basis on StockCharts, which is the platform we're using here. So we're looking at the total return of Netflix versus the S&P essentially with these lines. So as a reminder, if the lines are going up, the stock is outperforming. Now, in the previous video, we talked about Netflix as potentially being the best position, having just broken out of a 13-month base, broke to new price highs, has followed through over the last month or two. And you can see that the relative strength overall has really rotated from a period of underperformance from January through July and August, starting to rotate rotate higher as Netflix is outperforming the S&P over the last quarter, the last 3 months. You then have Microsoft, and in the second to third quarter, you can see that Microsoft has actually been doing very, very well on a relative basis. Really, the relative low was in January. From there, this has been one of the better stocks to own within the FANG stocks. The best one to own on a relative basis has been Alphabet, which starting in January here, when both Microsoft and Alphabet bottomed out on a relative basis. Look how the relative strength is consistently strong. So out of the 6 stocks, Alphabet and Microsoft have by far been the best relative bets to make. Netflix has really become one of the better bets in the last couple months. You can see that these 3 relative lines are very subjectively color-coded green. Now we go to the other 3, which are all color-coded red. Look at how the relative strength has improved here for Apple, June and July, but then sort of tapered off, right? And it's now making a new potentially 3-month relative low. Amazon is the chart below here, sort of overall over the last 12 months, probably the worst performer on a relative basis. It's been a consistent underperformer. So those are the 2 stocks, Apple and Amazon, which really breaking down Thursday into Friday. They reported earnings after the close on Thursday. Both disappointed, and they cited 2 kind of main things, I would say, main things. Number one is supply chain issues, which I feel like everyone is getting impacted by. The good news about that as a long-term thesis, it's probably temporary. Those are the kind of things that sort of get worked through, and it's affecting everything. But eventually, there's plenty of demand, and that'll be there for the supply when it comes. The second one is a little more concerning, which are inflationary pressures and or rising interest rates. Rising rates tend to be a headwind or an obstacle for growthy stocks like Apple and Amazon to do well, because they are going to impact consumers' desire to be throwing money at new phones and new retail products and whatever else you want to buy on Amazon. Certainly not books, or very rarely books now. It's other stuff, right? Discretionary purchases. So these stocks are still coming off a little bit, but the relative strength has been very underwhelming relative to the first 3 stocks, right? If you look at Microsoft or Alphabet, look at the relative strength over the last year versus Apple, which has been relatively flat, versus Amazon, which has been consistently down. So the chart of Amazon is actually flat on an absolute basis. The price has been okay. It's been in the base for over a year. It tried to break out in July and failed, and now it's back within that range. But the relative strength has been relatively weak because the market as a whole, the S&P and the NASDAQ, has been making higher highs every month, while Amazon has not been doing so. So as a result, these lines going down are telling you that they've been underperforming. Facebook is the last one, or Meta, or whatever we're going to call this name eventually, but Facebook has had probably the most cyclical relative performance, underperformed going through January, outperformed through July into early September, and then is really underperformed. So Facebook is probably the biggest rotation lower. So while Netflix is potentially the most improved over the last quarter, Facebook is arguably the least improved, or the most negative turn on a relative basis. So you can see from this chart, you can very quickly differentiate the FANMAG stocks, those 6 names, into the 3 outperformers, Netflix, Microsoft, and Alphabet, and the 3 underperformers, Alphabet, Amazon, and Facebook. Why this is interesting to look at is because statistical studies that have been done on trend following, momentum investing, and relative strength are based on that usually 3 to 6 month period, sometimes a 12-month period. It's looking for stocks that have good relative profile. Stocks that perform well over that time period tend to perform well going forward. It's best to buy relative strength and plan on that continuing. It's best to underweight or get away from relative weakness, because those tend to underperform. So if you're looking 3 stocks on the outperformance side, it's Netflix, Microsoft, Alphabet. The 3 underperforming, Apple, Amazon, and Facebook. This sort of analysis is called relative strength. We're looking at the relative performance of stocks versus a benchmark, stocks versus each other, stocks versus an industry, ETFs versus one another. A lot of different things you can do to look at a comparative analysis. Is it better for you as an investor to own stock A, security A, or security B? And these ratios tell you very clearly which stocks are working and which ones are not within the FANMAG 6. So there you go. That is another look at the 6 FANMAG stocks, this time using the power of relative strength. Relative strength investing is all about understanding the relative performance of certain stocks or ETFs versus a benchmark or versus each other. Looking at the relative performance you would expect from owning one security versus another, or one stock versus a benchmark. By looking at those 6 FANMAG stocks using relative strength, you can see the 3 clear outperformers and the 3 clear underperformers. What does that tell you about the possibilities or the prospects for these 6 names between now and year end? Which of the 6 do you think is best suited to outperform, and why? Let me know in the comments below. Also, if you like this sort of thinking about investor decision-making, market history, market dynamics, breadth, sentiment, trend, momentum, all of the above, if that's of interest, hit subscribe. I'd love to have you along this journey with me. Also, give the video a like if you appreciated it. We would very much appreciate that back. For everyone at Market Misbehavior, I'm Dave Keller. Be well, stay safe, have a great one.